It's about time we had a conversation about how to purchase a $1 million investment property with bad credit, no collateral, and no down payment. Don't you think so? If you do, I want you to stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's show, I'm going to show you a proven formula to get approved for a $1 million or more investment property mortgage with bad credit, no collateral, and no down payments. The cool thing here is that this guide applies to any business located anywhere in the world, not just in the United States. So business or property doesn't matter. The location doesn't matter. If you follow exactly and methodically the 5 points I'm revealing to you in this show, you will significantly increase your chances of getting the funds you need as a commercial property investor. As with anything else in life, though, there is no 100% guarantee, but with this method, you would have crossed all the T's and dotted all the I's in such a way that when lenders see your application, they just want to work with you and help you buy your investment property right away. And you will find these tips helpful even if you have no credit, good credit, or excellent credit. So let's first lay out the foundation of today's conversation. To get approved for a mortgage on a $1 million investment property with bad credit, no collateral, and no down payment, you need to prepare a strong application with the 5 points I will reveal to you in today's show. I will explain to you step by step the 5 things you need to have. Now, one thing I want you to think about is that non-conventional real estate financing includes things like structured property loans and mezzanine loans and credit lines. I won't go in details in this show because they could also help you, but I want to go straight to the things that are a lot easier and a lot more accessible to a lot of people to explain what you need to do. First, you need to understand the concept of something called hard money lending. This is key. This is quintessential, folks. Hard money loans, sometimes referred to as bridge loans, are a type of financing typically used by real estate investors. And hard money lenders are usually not banks, but rather private individuals or companies. And this type of asset-based loan uses the property as collateral, really. So this kind of funding is generally quicker and simpler for borrowers, though it can be more costly when it comes to interest and fees. So you don't need to, not all hard money lenders require a down payment, but some do. Most often, house flippers and other real estate investors need a 20 to 30% down payment to mortgage a property with hard money financing. But in today's show, I'm going to show you how to do this with no collateral and no down payment. And hard money lenders charge anywhere between 8 to 15% of the total amount that they're financing. So borrowers must pay the monthly interest until the investment property is sold and they can pay the loan back in full. But as with everything else in life, it's all about specifics, right? So you need to talk to your lender to see exactly what kind of loan proposition they have for you. So, as I said earlier, you need to understand the concept of hard money lending. Once you do that, you need to contact hard money lenders directly. Pick up the phone, folks. Don't waste your time on the internet trying to fill out a lengthy application process. It won't go anywhere. You want to call them directly. You want to pick up the phone. You want to talk to someone, a loan specialist, somebody in their underwriting team, and then you want to follow their instructions, right? You can send the application via email. Do not apply online unless instructed to do so. And the top 5 hard money lenders in the industry today are, you have RCN Capital, you have Corvest. We have actually covered those companies in another show. You have Lima One Capital. We're showing you, for each company, we're showing you on the screen the snapshot of the website as well as the hyperlink. So you have Ground Floor and you have Lending Home. The third thing you need to do, you need to send a properly documented investment property mortgage application. And it's all about, and I'm showing you right now an example of a cover page below. And I'm going to explain each section you see on the screen. I'll cover all the 5 parts in today's show, but I want you to look on the screen right now. This is how your property mortgage application should look like, at least the cover page. All right, so you need the project sponsor. You need to talk about the project sponsors, the company information, the property information, the monetization strategy, and last but not the least, you need to talk about the regulatory compliance. Very important. Fourth, you need to do something that is very critical also. You need to enlist professional help if needed. So you need to outsource as much as you can, and you want to focus on your forte. Really want to focus on what you're good at, right? Don't try to do everything. You can't do it. I mean, the bottom line here is you want to have your money work for you, right? So enlist professional help if needed. By professional help, I'm talking about lawyers, accountants, tax accountants, and so on and so forth. Next, you want to anticipate all questions the lender may ask, and you need to get ready to properly answer them. So normally closing can happen in 5 to 10 working days, and but as we're showing you right now on the screen, we have a snapshot of another lender called the Patch of Land, and the process takes on average 7 days with that lender. So you can see on the screen right now, Patch of Land, it takes 7 days. So according to their website, the process comprises 5 steps. So they have a 5-minute loan application, opportunity discussion with an underwriter. You need to fill out extra loan application documentation. They will conduct due diligence, and then they will advance the funds to you. This process is pretty analogous across the industry, really. All other lenders follow something similar. So expect 5 to 10 working days to close the deal. Now, let me talk to you about getting approved for a $1 million property mortgage. So remember, you have to go back to the 5 steps I already talked about. Understand the concept of hard money lending. Contact hard money lenders directly. You need to send a properly documented investment property mortgage application. Enlist professional help and anticipate all questions the lender may ask. First, to get approved for a $1 million investment property mortgage with bad credit, no collateral, and no down payment, you need to talk about the project sponsors. Folks, very important. By project sponsors, I'm talking about the resume and personal bios of each project sponsor. If that's you, you need to have a properly documented resume. I'm not talking about a 1-page. No, please invest. If you need to hire a resume writer, pay the person $50 or $100, do it. It's worth it, right? Think about it. You are seeking $1 million in investment property loan. So spending $100 to have a professional resume makes sense. You also need to have the resume and the personal bio of the developer. Folks, I'm talking to you now about each package, each documentation you need to put in the first part of your property mortgage application. The project sponsor, so the resume and personal bios of the project sponsor or sponsors, the resume and the personal bios of the developer or developers. You need to actually talk about your prior experience in real estate investments. Your ability to convince the underwriter that you have some kind of experience, you have some kind of acumen in the field will go a long way. You need to also talk about if you have, you need to write a bankruptcy. There's something called BES. This is a bankruptcy explanatory statement, if applicable. In other words, if you have filed for bankruptcy in the last 5 years, you need to explain why and how that bankruptcy is affecting your current financial situation. You need to talk about also, you need to write something called LES. This is a litigation explanatory statement, if applicable. In other words, you need to talk about whether or not there is pending litigation, such as divorce, civil or criminal prosecution. You need to provide banking references, personal credit reports, pending government action. If you have an IRS tax lien or something going on, if you owe back taxes, you need to talk about that. You need to attach to the application the individual tax returns for the last 3 years of each project sponsors. And you need to write something called a HCS, a holding company statement, if applicable. This is where you indicate all businesses in which you hold equity ownership and or hold management, voting, or decision-making control. Remember, for BES and LES, you want to mention those sections only if there is anything pending. Otherwise, you want to skip those parts. The part 2, company information. Here you want to talk about the legal structure, whether you are a sole proprietor, LLC, partnership, S Corp, or C Corp. Traditionally, no lender is going to give you money if you are a sole proprietor. So you want to really constitute a company. LLC does pretty good, or a partnership. You want to show the articles of incorporation. You want to show the operating agreements, partners agreement if applicable, business financial statements for the last 3 years, business tax returns for the last 3 years, business credit reports. You want to talk about your support team, the size, experience, and location of your team. By support team, I'm referring to everybody who helps you in the investment property activity, whether he or she is an accountant, your lawyer, your business development specialist, your admin, whatever. You need to put all the information that's needed. Your attorney information, because the attorney will be there to close the deal. Your banker information. You need to include references for both. You need to also include your insurer information. It's very important because when we talk about investment property or residential property, for that matter, insurance is really important. But the types of insurance for real estate investors and landlords are even more important. So I'm referring to hazard and fire insurance for the physical property, liability insurance, sewer backup insurance, flood insurance for the physical property, terrorism insurance depending on where you live, builder's risk insurance, loss of income insurance, this is rent loss insurance, general contractor insurance, workers' compensation insurance, and umbrella insurance policy. Now, you may have or may not have some of those policies, but you want to include as many as you have. If the lender needs more, if the hard money lender needs more insurance policies from you, they will contact you and specify that. But the bottom line here is you want to project an air of credibility, an air of professionalism, an air of readiness, right? You may have bad credit. You may have no collateral. You may have no money to put down, but you do have professionalism. You are organized. You have a vision, and your goal is what? Your goal is to get that moolah. Your goal is to get that $1 million investment property loan. Very important. So one thing I want to say is that if you don't have a company and you are just a sole proprietorship, you can still provide whatever info you have. That's if you don't want to switch to a company legal structure, you can still provide as much info as needed. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a convo about how to buy a $1 million investment property with bad credit, no collateral, and no down payment. Now, you need to talk about in your application, in your loan application, you need to talk about the property information. Again, this application is going to a hard money lender, not a conventional lender, not a bank lender. No. You got to go to a hard money lender. And in terms of the property information, you need to talk about, of course, location is very important, right? You need to talk about the contractor information, the construction estimate and time frame. Those are pieces of quintessential information. The property management questionnaire. You have to talk about the purchase contract if this is the purchase. You need to have a list of comparable sales, so CMA, BPO, MLS listings. You need to mention the current owner information if applicable. This is very important. You need to put information on current or past lenders, inspection reports of the property if available, and insurance, geographical, and meteorological exclusions pertaining to the property. Here I'm referring to earthquakes, sinkholes, floods, mud flow, storms, and hurricanes. And While if you actually include those elements in your application, you need to demonstrate how you will mitigate those risks. Again, the whole idea here is to remove any iota of doubt in the lender's mind. You need to project an air of credibility. You want to show the lender that you are ready and that you know exactly what you're getting yourself into. All right. And also, and this has worked very well in our research. People, investors, property investors who actually succeed, they hire a property manager. So hiring a property manager may seem like a great way to spend money instead of earning it. However, as many beginner real estate investors will soon realize, doing something right the first time is a huge money saver. So rental property management is a lot of work, and it requires a lot of knowledge. So to reach the money making step of renting to a good tenant, you need someone to fund that tenant. You need someone to maintain that property. You need someone to collect those rents. All right. So opting for a rental property management company will have you saving on maintenance costs and vacancies. Very important. So you want to find a property manager, and you want to include that person, that company's or person's information in the loan application. Step number 4, folks. If you remember, I promised you 5 steps to getting approved for a $1 million investment property with bad credit, no collateral, and no down payments. So we are here on step number 4. Step number 4, you need to explain the monetization strategy. You need to explain to the lender how you intend to derive revenue from the property, how you intend to derive moolah, kaching, cash, dough, whatever name you want to assign to it. You need to demonstrate that. You need to demonstrate your knowledge of the market and your competition and how you're going to beat that competition. Very important. You also need to explain how you will set competitive rental prices. All right. You need to explain how your offer is an offer that potential tenants cannot resist, especially if you are in a super hot location like New York or Cali or California. You really need to come strong and explain this in your loan application so that the lender knows that you have a strategy. You have a plan A, plan B, plan C, all the way to plan Z to actually quell any attack, quote unquote, attack from the competition in terms of pricing. And you also need to elaborate on your space usage plan for revenue optimization. In other words, you need to explain to the lender how you're able to utilize all the space available on the property, not just the rooms, but also everything else like the backyard, the front yard. Because if you think about it, those are additional revenue generators, really. You need to explain your budget strategy for the property. You need to actually show again, you need to have a picture of cash in and cash out. So cash inflows and cash outflows. You need to demonstrate your financial strength and your ability to make mortgage payments. This is an important element for lenders. They want to make sure that you are able to repay them. You also need to explain what other sources of funding you have, if any, things like lines of credits, loans, other investments, securities, partners, cash investments. And you also need to show the solidity of key property metrics. So what are those metrics? The metrics are rental income to qualify, the RIQ, the property value to income ratio, the mortgage payment to rent ratio, the gross rental yield, the capitalization rate, and the cash flow output. Very important. Next, you need to prepare a projected statement of net income, net operating income for the next, say, 3, 6, and 12 months. What is net operating income, NOI? So this is basically the rent you collect minus all operating expenses. So the most common operating expenses are what? Vacancy, right? When your property sits empty, because you're still incurring expenses even if the property, there's nobody in the property, right? You have repairs when your property needs fixing. You have management fees for finding evicting tenants and paying attention to the details. And you have delinquency when tenants pay late or stop paying altogether. And so you need to think about, while preparing your statement of net operating income for the next 3, 6, or 12 months, you need to include vacancy allowance, repairs, management fees, delinquencies, And you also have to think about the appreciation of the property. Remember that the appreciation of the property from a purely accounting standpoint is not a cash event, is not a cash inflow. Your property is appreciating, but until you sell the property, you can realize that the gain, right? So in accounting, it's called the unrealized capital gain if you hold a property for more than a year. So you have to really pay attention to that. But one way you can actually increase the allure, you can increase the attractiveness of the property vis-a-vis the lender, is to mention the fact that there are, we're talking about a property that has a high appreciation potential here. And you need to explain the factors that underlie that appreciation potential. And what are those? You have fixed supply, population growth. If you live if the property sits in an area that has a high density metric, that's pretty cool for you, right? I mean, we're talking about the right crowd though, right? The right neighborhoods, right? So you need fixed supply, population growth, equity, the tax benefits also. And you also need to talk about 1031 exchange. Now we have an entire show that will focus on 1031 exchange, but just remember that if you decided to sell the property after a specific period, you could use a 1031 exchange to defer paying any taxes on that money so long as you use it for another investment property. There are other criteria that must be met that will not be addressing here, but we'll talk about it on another show. The fifth and last element in your loan application package is regulatory compliance, and this is very important. If you really want to get that $1 million investment property with bad credit, no collateral, and no down payments, you need to talk about regulatory compliance. Making money with your first rental property can be very, very risky if you don't know or ignore the rules and regulations. Rule number one for real estate investing is knowing the laws. There is no point in buying an investment property that you can't take advantage of, right? Just makes sense, especially if you're getting $1 million for it and you can't take advantage of it in the future. You can't generate any cash afterwards. It doesn't make sense. So buying an investment property you can't use is a huge waste of time and money. So and this tip, the tip about rules and regulations, is especially important with a short-term rental strategy. So to avoid losing money, make sure you know the renting regulations specific to the city you are interested in before you buy. And so in your application, you have to include a few things, not only to quell the doubts and concerns of the lender, but also to cover yourself, to convince yourself that you are prepared. So you need to talk about which team members you rely on for expertise in regulatory matters. You need to list them and include their bios. This could include your attorney, for example. And you need to talk about whether or not there are any non-standard lease terms which differ from a standard lease form, including any purchase options, rights of first refusal, or similar purchase rights. And you need to talk about whether you are aware of any illegal activities associated with the property. Is there any material deferred maintenance or damage associated with the property? Are there currently any condemnation proceedings associated with the property? Is there any fire code, building code, zoning, or use permit violations associated with the property? Are there currently any tenant delinquencies associated with the property? So those are questions that you got to ask yourself, and you also need to answer in your loan application. Again, the whole idea is to remove any iota of doubt in the lender's mind and you want to project an air of credibility and confidence in your loan application so you can get the $1 million loan approved. You also want to answer questions such as, is the property subject to affordable housing assistance programs or subsidies either at the federal, state, or local level? Is the property subject to rent control ordinances, rent stabilization, or similar laws? Is the property in compliance with key rules and regulations such as the federal fair housing laws, including the Fair Housing Act, Title 8 of the Civil Rights Act of 1968, the Americans with Disability Act of 1990, federal, state, and local environmental laws, including the Residential Lead-Based Hazard Reduction Act, federal consumer credit laws, including the Fair Credit Reporting Act and the Fair Debt Collection Practices Act. So the bottom line here, the bottom line is what? Bottom line is that you need to actually cover the whole 9 yards when it comes to regulatory compliance in relation to the property on which you are seeking a loan. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to the final section of today's conversation. So I've been talking to you about how to buy a $1 million investment property with bad credit, no collateral, and no down payment. One thing I want to say here is that please don't hesitate to outsource as much as you can. You want to surround yourself with winners. You want to surround yourself with professionals, right? If you have no clue, if you have no knack for financial accounting, no knack for marketing, no knack for legalese, surround yourself with people who have a knack in those fields. Very important. All right. And so to get approved for a mortgage on $1 million investment property with bad credit, no collateral, no down payment, you need to create a strong application with the 5 points I indicated in this show. And I'm showing you again on the screen so you can see. Here is how your cover page should look like. And the 5 elements that your investment property mortgage application should actually should comprise. So you need to talk about the project sponsors, the company information, the property information, the monetization strategy, the regulatory compliance. This is the application. But before you actually, but once you have the application, remember that you have to do what? You got to contact you have to contact. First of all, you need to understand the concept of hard money lending, because you are reaching out to hard money lenders, not traditional banks, not conventional funding mechanisms. No, you're reaching to private money lenders and hard money lenders. You need to contact them directly, talk to someone on the phone, send the application via email. Do not apply it online unless instructed to do so. You want to send a properly documented investment property mortgage application. You want to anticipate all questions that lenders may ask and get ready to properly answer them. I want to thank you for your attention. I want to wish you good luck, and I will see you next time. But until then, remember, stay marvelous.